So today we'll be taking up the first question on the trend line. First of all, trend line is a big subject, and at NP Financials we are big on trend lines and bar by bar. Those two things are we are extremely big, and of course our Elliott wave and other things are all extremely good. But we'll be doing the dollar index. We'll be doing the dollar index from the trend line perspective. From the trend line perspective, we'll be doing this. All right. Okay, so let's delete this. So as we know, trend lines are of uh, mm, 3 or 4 types. What are the types of trend lines? The first trend line can be an invalid trend line, which we must not draw, because most of the people do not know the difference between invalid trend line and valid trend line. So that is the first differentiation which we will do. And the second differentiation which we'll be doing is after drawing a valid trend line, we'll be differentiating between valid tentative trend line and valid confirmed trend line. And let me tell you, in the book it is written, and there is a good saying that a kid with a ruler can make millions. Kid with a ruler can make millions, and we are those kids. We want to make millions. So how? I'll take on the questions of Vijayata to start with. We'll go with trend lines. For trend lines, what we need swing lows. So what we do, we write here swing low and can make it 0 from the font size. And this is another swing low we saw. And this is another swing low we saw. So when we saw swing lows and price is going up, our next job is to identify swing high in between. So this is swing low, this is swing low, and in between we'll be going identifying the highest swing high. So there can be many, like this one, like this one, like this one, but between these two swing lows we have the highest swing high here. So we'll write down swing high there. What did I do? Swing high. So I'll go to swing high, write it down, swing high here, and then copy this one here and paste it here. Paste it here, because this is a swing low, this is a swing low, and the second swing low must be higher than the first swing low. So second for an uptrend. So we'll be discussing valid trend line. And we'll also be commenting on invalid trend lines, and we'll be discussing on valid tentative uptrend line, valid confirm uptrend line, and if possible valid tentative downtrend line, and valid tentative uptrend, valid confirmed downtrend line. So first we'll be discussing the trend line, where to start. So we need to start from the beginning of, for example, maybe a double bottom or a double top. For in this case, this is a double bottom, because this is another swing low, this is another swing low. Second swing low is lower than the first, and this double bottom is the base formation, and it is coming after a downtrend. After a downtrend it is coming. So this is the base formation. And as you know, at NP Financials, we have seen the base formation takes time, and this base formation, if you can see, we call it accumulation. This accumulation phase went for 29 bars, but the distribution phase from here to here is only 5 bars, or even from here to there is only 12 bars. So the distribution phase at the top, at the double top. So at the double top level, the second swing, class A, second swing high must be higher than the first. The double top, the distribution here, the panic or the distribution here takes immediate effect, and then price comes down faster than on the accumulation. So this is the accumulation, which is the base formation. And after the base formation, we need to see either a double bottom or a head and shoulder. In this case, we saw a double bottom, the class A, because this swing low, last swing low is lower than this swing low. And also, if I put volume, the volume would be maximum here, and volume will die down on the second phase. So if when you do the volume study, we'll take that answer. But now we are concentrating on the trend line. So trend line should start from the uh, from the break of a trend line and another trend line, or from the start of the distribution phase, or from the accumulation phase. So this is the start of the distribution phase, as I showed you. So this is the accumulation phase. Accumulation phase, people are accumulating on hope. Why it takes time? Because it is on hope, and hope takes time. Hope is not real, not more real than fear. Fear is very real. Fear is extremely real. Greed and hope are also real, but little bit not that strong as fear. So I believe that that is why the hope, that is why the accumulation takes so much of time. Accumulation takes so much of time, and I'll come back to this trend line later on. For the time being, I'm marking this swing low and this swing low. In between swing high, there is one. And if there is no swing high, if there is no swing high and we are joining arbitrarily swing low to swing low, that is invalid trend line. I repeat, if there is no in between swing low, in between swing high, between the swing low, that is an invalid trend line. So what do we need to do? We need to identify swing low, and second swing low must be higher than the first swing low, and there at least one swing high in between these two swing lows. There can be many, like 1 2 3 4 blah blah blah, but we'll go to the maximum one. We'll go to the maximum one, and then take this trend line and go to the lowest point here, and then go to this point here, and we'll wait for this in between swing low to be taken out. In between swing high, in between swing high to be taken out. Taken out means price has to go up, price has to go beyond this, so price immediately went up. So this this is a valid tentative trend line. Now because the swing high has been crossed, so that will be a valid confirmed trend line. So for valid confirmed trend lines, we'll be using full line to tell us that this is a valid confirmed trend line. Never ever draw invalid trend lines. Draw valid tentative trend lines. Also to see whether the tentative trend lines, tentative trend lines is getting confirmed, changing into a confirmed, a valid confirmed trend line. So this is a valid confirmed trend line. You do that and forget about it. You do this and forget about it, and then wait for this swing high to be taken out. But when price has to go beyond this high point, this high is 10433 for dollar index, and this is more than that, 10,500 or whatever. All right, so next we'll go to ding ding ding. We are missing Dario today. Ding ding master. All right, so in the between we got a swing high. We need to see another swing low to join this. The second swing low should be higher than this one. Now this is first, because price is going up in an uptrend. So uptrend lines is having the phrase uptrend line is having three word: up, trend, and line. So trend line is having two word: trend and line. What does it mean? It means that there should be a line if there is a trend. There should not be a line if there is no trend. And what is the definition of uptrend? In the second term, at NP Financials, we have first term, second term, and third term. In the second term, which is most important, we call it higher swing high and higher swing low makes an uptrend. So this swing high is higher than this swing high, this swing high higher than this swing high, blah blah blah. This swing low is higher than this swing low, this swing low is higher than this swing low, blah blah blah. So higher swing high and higher swing low makes an uptrend. So this is uptrend line. So we will be joining a line if there is a trend. Trend is higher swing high, higher swing low. And uptrend line is both swing high going up, both swing low going up. And then we'll do ding 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 ding. We got a swing low probably. We need to wait for the third bar. The definition of swing low is the third is 1 2 3. This second low is lower than the first, and the second low lower than the third. Similarly, swing high 1 2 3. Second high is higher than the first, and second high is higher than the third. So now our job is to draw this swing low to that swing low, and this is a tentative or a confirmed trend line. Who can tell me?
Tentative.
Very good, excellent, fantastic. That was Lisa, is it?
Yeah.
Yeah, Lisa can talk now. I believe. Okay. So this has to be taken out. That is why Lisa said tentative. Unless and until this is taken out, it will not be a confirmed line. Let's see. Ding. Yes, taken out. That means price has gone. Price has gone beyond this. So we'll confirm. We'll change this. We'll change these to confirm trend line, configure trend line, and full line. Confirm trend line. Very good. Very good. Very good. You may join this to this. You may join this because this is also swing low. This is also swing low, and this is a swing high which is taken out. So we will do that confirm trend line. This is how we need to draw valid confirmed trend line. Why am I doing this? What is the purpose of spending last 7 minutes on these three? Because if you ask anyone, do you know trend line, they will say yeah. But if you go do you know the difference between valid and invalid, they will say what? And then they will, if you ask, do you know the difference between tentative and valid confirmed trend line, they will say what? They don't know. That is why most of the people cannot make money here. Now that we know from our understanding at NP Financials that there are tentative valid trend lines and valid confirmed trend lines are the best one. What is the purpose of the valid confirmed trend line? Market participants will respect. I am using will. I'm not using shall. I'm using will respect valid valid confirmed trend line, and they will never respect invalid trend line, and they will somewhat respect valid tentative trend line. Okay, so now these three lines in front of us are confirmed trend lines. So far so good. Any question on trend so far? Now the magic will happen. Any question before I show you the magic? All right, so now let's go to the next one. Boom. So price went up and we have one resistance there, second resistance there from the quarterly, yearly. My goodness, so many resistances. Now at this point, price always ask us a question. What should I do? What should I do? What should I do? Should I go long? Should I go short? Should I go do? So should I do what? So in this situation, the first thing is the question mark. So question mark on this date, which is 22nd of November, because price is respecting the valid trend line. That means it is not closing below the valid trend line. Then the price is asking, what should I do? As we always say, price is like water or ping pong ball or water. So if price faces too much of resistance, so many lines, then it will go down. If price faces too much of support like this, then it will go up. So that is like a ping pong ball. If you throw the ping pong ball onto your floor of the ground floor, it will go up, and if you throw the ping pong ball to the ceiling or the roof, it will come down. So now when we have been seeing that, oh my god, this is facing too many resistances, let's see what will happen. So we have specific rule of 4, and it can break 1, cannot break 2 rule. So let's apply them, and also we'll stick onto the trend line. Let's see what happens next day. So with these week, if I change this to a candlestick, those of you who are firm believer of candlestick, they will say immediately the upper week is much higher than the lower week. Upper week is much higher than the lower week. WICK or shadow, and then that upper week denotes the selling pressure. Upper week denotes the selling pressure, and this is the buying pressure. So there is not much of buying pressure, although there is a buying little bit body, but even the body is lower. Body is smaller than the upper week. Each bar, each candle, that is our strength. Each bar, each candle is our strength. Bar by bar analysis at NP Financials. Why we are attacking dollar index? Because if we understand dollar index, we will be understanding all the 8 in a just like this. Just like this, we'll understand all the 8 instruments we trade. I will tell you how to understand. You already know. I'll just tell you again.
Pata, why
Hmm.
didn't you use the Heikinashi candlestick?
Heikinasi is good for holding onto the trade. Heikiness is very good for the holding on to the trade, but they may not be as good as sorry, they may not be as good as the reversal. They can be good. I can show you Haikinashi. That is why if you go to our NP Financials more and blog, then you will understand. We have written down the new blog how to hang on to the profit. Okay, on Tyrant's request, what I can do one thing. I can do add indicator, but that will be a little deviation, but I'll take that deviation from the trend line. But just to answer, because I respect all the questions, and no question is foolish question. Only the answer can be foolish if the instructor does not know. So new panel, price, new panel, add, and then we can change it to Haikinashi. We can change it. So in the Haikinashi also, we saw a very big shadow, very big shadow. But for the time being, because we are discussing trend line, I'll a little bit concentrate on this one also. So where am I? Okay, so then what? Delete price. Okay, now we have, now from the understanding of the candlestick, it is not a very good inverted hammer, but a kind of rejection. Then we never buy at resistance. So what we'll do, we'll wait for this, most possibly with 80% or whatever percentage you use, probability that we'll wait for the sell. We can sell here, or let's see what happens. Ding. Now this ding is there is a gap. There is a gap here. There is a gap here, as you can see. Probably there is a gap between the close, between the close and the open. Close of this blue bar and open of the red bar. There is a gap, and this is Friday and this is Monday. What type of gap is this? Those of you who are not speaking, if you can please mute your microphone, that would be great. And what type of gap is this one at a resistance?
Exhaustion gap.
Oh wow, Lisa, you're back with a bang. Fantastic, brilliant, 100 out of 100, Lisa. Exhaustion gap, because this is at a resistance, and we have three types of gap: exhaustion gap, and then followed by the breakout gap, and then it will be then continuation gap. So I would say, Lisha, probably this fellow, the previous one from this, where am I? Okay. So exhaustion gap, Lisha, should be happening in the direction of the trend. So then like this, I'll show you one other which is the exhaustion gap. But for the time being, this is a breakout gap, my dear friend. This is a breakout gap, because this is breaking something. Breakout gap. What it is breaking? Invariably the breakout gap breaks the trend line or a straight line, In this case, it is breaking the two horizontal support resistance line, these two, one from the yearly, one from the monthly, one from the daily. So daily and yearly, and then it is breaking this trend line. So this is a breakout gap. Lisa, I will show you exhaustion, but you are very close, because it is appearing at the end of the trend. And this, my dear friend, those of you who are not only listening to me but also thinking and looking at the chart, this is a class A double top. Agree, not agree? Any question on breakout gap and double top? Any question?
Yeah, Partha, I got a question. So you don't have the gap there occur because the Sunday bar isn't on the screen. What's your thoughts and opinions on displaying the Sunday bar?
Yeah, brilliant question, Ben. I hope everyone understood what Ben is saying. Ben is saying that because we don't like Sunday bar, not because we are not in Middle Eastern countries like the Qatar, Kuwait, Saudi Arabia, Iran, Iraq, Dubai, United Arab Emirates. They work there. When I was in Sabiq in Saudi Arabia, I used to work start my working week on Saturday, and the Jumma bar, that is the Thursday, Friday, where they are holidays. Because there is a very small little volume, that's what we do. We go to the information, those of you who are starters, who are beginners, information, and then go to trading hours, and then take this out, display weekend data. We don't like this Sunday bar. Then Ben is asking, is there an effect? I would say possibly yes and no. No is more. No is more. 65, I think 70% answer is no, 30% is yes. Yes, there can be a gap between Friday and Monday if there is no Sunday bar. But in front of you, Ben, if you see, this is Friday, 15th of November, and this is Monday. There is no gap here, see?
Yeah, it is. I'm just wondering what if it's worth showing the Sunday bar, because there is such little volume on a Sunday, and it's can sort of play around with your the way you do your trend lines and stuff like that. If the Sunday does something different,
Yeah. So though it's entirely up to you whether you want to have the Sunday bar or not. I personally do not find Sunday bar useful, because they create unnecessary swing high, swing low. They create unnecessary gaps. That is why. Did I answer your question, Ben?
Brilliant answer. Thanks, Partha.
Thank you. All right, so we got a double top here, class A, and we got a breakout gap, and we got a trend line break. Trend line, that is why they say a kid with a ruler can make million. We are all kid, we are all learner. No matter what, how long we have been trading, doesn't matter, absolutely doesn't matter how long we are trading. I believe, still I breathe, I'll be learning. And now if anyone asks me, tell me anything about myself, I, as a Partha Banerjee, I will say I know nothing. The only thing I know about myself is I know nothing, number one. The only other thing I know about myself is I am no one. So these are the two things which keeps me grounded and keeps me force me to learn every day from all of you. So this is the trend line which is being broken here with a breakout gap. So we can take a position at this point according to our signal. But that is the beauty of the trend line break. And let's see, and drawing the trend line first of all, and then wait for the break to go for short. To go for our strategy will tell you definitely from the foundation point of view that we will go short. And on the histogram also it will tell us to go short from there. But this fellow, the trend line, because the first question I have taken is trend line. The trend line itself is telling us to go short on this date, which is Monday 25th. And if I go to the strategy, if I bring the strategy in front of you, this fellow is telling us a 2 TP, 2 turning point, because this histogram has crossed red histogram. We generally say red means sell. So this strategy is exactly matching with the trend line. So those of you who are not having this strategy, unfortunately, because they are not in NPF financials, neither they know how to draw a trend line, would be thinking what to do. Because if you have not drawn this trend line, if you have not drawn these lines, then we are trading blind. All right. So this is the first break of the trend line. Let's see. And then we are going down. Ding, 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 ding. All right. So ding, ding, ding. We are making money. Ding, 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 ding. So we saw another gap between Thursday and Friday. My dear friend Ben and everyone, can you see that this is Thursday and Friday? There is a gap between Thursday close and Friday open. And what is this gap?
Will that be coming to a continuation gap or an exhaustion gap?
Continuation gap. So this is continuation gap because price is continuing in the same direction. Price is continuing in the same direction. That is why it is a continuation gap. Pull mark to Ben. I'll show you exhaustion gap. Don't worry. So this is breakout gap because price has broken this trend line. Price has broken these two lines and breakout gap, and then continuation gap, and then ding, 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 ding. We are at the last date, 29th of November. So this is the purpose of trend line. And I'll because I'm talking about gaps also, I will take on the gap. But before I go to gap, exhaustion gap, Vijayata, did I answer your question on the because I'll be extending on this. I'll be coming back to this, so I'll go quickly to show you exhaustion gaps, because those of Ben and my friend Lisha, all of you are my friends. And then say, let's see, exhaustion gap, ding 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 ding. All right, exhaustion gap. This is an exhaustion gap, my dear friend, because price is going up, ding 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 ding. Very well, this is the accumulation. Price is going up, and all of a sudden we saw a swing low here, another swing low there. So we got another first swing low, second swing low, in between swing high, in between swing high. So this is a confirmed trend line. But the problem with outside bar, the problem with outside bar like this fellow, this can be a swing high as well as a swing low. So if we consider this as a swing high, then the high is not taken out. That is why it is a tentative trend line. But if we consider, if we ignore this swing high, I think we cannot. But if we consider this as a swing high, then this will be a confirmed trend line. But this is an outside bar, as you can see, after an inside bar and outside bars are 10% of the bars, and they denotes an indecision. They denotes indecision. And we have joined this swing low to this swing low. This swing high is not taken out. This is a valid tentative trend line, and this is an exhaustion gap from this close of 31st July and 1st August. 31st July and 1st of August, there is a gap at the resistance, at the double top, at the resistance, there is a gap. So this is exhaustion gap at the end of the trend. How do I know at end of the trend? Double top, double bottom, head and shoulder, all those patterns are generally denotes end of the trend. And also this has to happen at the top right hand corner of the chart. Top right hand corner of the chart, not at the middle, not at the bottom, top right hand corner of the chart. If that is happening, then is an exhaustion gap. So this is an exhaustion gap, and this is a breakout gap. This is breaking this trend line, and this is a continuation gap. Again, this is a continuation gap, and this is a false gap. Why don't you say this is a breakout gap? Because it is not breaking anything. Because this is the swing high, and there is no other swing high to join. So there is no trend line. So it is not breaking anything. That is why if we join this Fibonacci, from this point to that point, you will see that it has not extended 61.8. So I have named it false gap. This is a trap. This is a trap by the professional. So false gap. And so breakout gap followed by continuation gap, followed by continuation gap, and then a check of 61.8, and then we go ding 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 ding. So continuation gap. So that is how we take advantage of the trend line. Now the trend line subject is gone. Now I will go to how to know. Let me break this recording here.